Hi, Jonathan York from Bay Financial Partners, looking at investment markets. A bit of a dichotomy in the US at present because you've got, still potential worries about a sort of recession, potential for earnings going forward, but also as well you've got the Fed coming out and, sort of implying that potentially the sort of pace of rate hikes going forward will start to slow, and that could mean an end to the sort of jumbo 75 basis points hike, with just a 50 basis point hike coming in meeting later in December. Because certainly from the Fed's perspective, it does look as though inflation has peaked in the US. You're starting to see those numbers now sort of coming down, only sort of slightly month on month, but it is on a clear sort of downward projection now. Which is obviously good news. But against that, you've still got a pretty tight labour market. Latest jobless numbers were still pretty strong, a little bit higher than anticipated. And you've still got around 1.7 vacancies for every one person looking for a job. Although potentially over the next sort of couple of months that could start to ease off as you're starting to see some sort of layoffs being announced, especially in the sort of big tech companies and also some of the big financials now as well. But certainly what is quite interesting as well is that 10-year interest rate in the US, the 10-year note. That is backed up all the way back to 356 on the yield now. Now, if you remember around sort of 4 to 5 weeks ago, that was trading around sort of 425. Now, an interesting turn on the political front, the IRS are going to have to hand over Donald Trump's tax returns to Congress. Now, if you remember, there's been about a 3-year sort of legal battle to sort of try and prevent that happening, but that's now been ruled by the Supreme Court that that is legal and that is going to happen. Trump has also made some pretty controversial comments about the Constitution as well, which potentially doesn't help his run for being picked for the Republican nomination. Now, also as well in China, there's been a pretty major sort of turnaround from the ruling party as a sort of relaxation of the COVID restrictions and lockdowns there. And various cities are starting to sort of reopen now, which again will have a major impact on the global economy. And potentially it's the first sort of test for Xi Jinping because, if he's looking at sort of getting a growth rate anywhere close to sort of 3 to 4%, he really does need that Chinese economy open, all cities working, and the economy firing on all cylinders. Now, also, we're talking potential sort of recession and sort of global slowdown. Oil has backed off now and it's currently around sort of 75 and change. So again, if you remember, sort of a couple of months ago, that was trading closer to $100. So that certainly does help the deflationary pressures as well. Now in the UK, as we head into Christmas, it looks like the UK economy is going to hit with some pretty major industrial disputes. The rail workers are looking to strike now in the next sort of couple of weeks, and indeed have just called a new strike now for Christmas Eve. So that really could play havoc with the UK economy and sort of travel plans over the Christmas period. Yeah, in the EU region, we've seen Spain's been hit with a sort of series of sort of letter bombs and potential sort of terrorist attacks coming through, which has put the rest of Europe on a bit of heightened alert. And winter is just starting to bite now in Europe as well, so it's just going to be interesting to see how severe it is, and obviously the impact of that on the sort of energy crisis that's taking place. Especially as that cap on Russian oil has sort of kicked in now at $60. Although obviously all countries need to abide by that, and it would appear that India and China are not at present. Now, Australia Reserve Bank has expected to put up rates again by another quarter point. That takes the official cash rate now there to 3.1%. And potentially you've got another 75 basis point hikes coming in 2023. Although at present the Australian economy does still seem pretty robust. You've still got plenty of sort of spending coming through from tourists, etc. And it's just going to be interesting to see how it plays through in the first sort of 6 months of 2023. Because certainly the approach that the Reserve Bank has taken, does give time for those hikes to sort of filter through and have an impact on the economy. Now here in New Zealand, the latest opinion poll is more bad news for the government. National and ACT would have 64 seats in the new parliament on the latest poll. That would give them a clear majority to be able to govern. And Labor is coming in at the weakest sort of support levels now since 2017. It's maybe not surprising because there does appear to be sort of conflicting stories coming out of the sort of government at present on various sort of policies. Most notably, obviously, is the three waters, but also as well on the sort of working visas and sort of getting those through. Because New Zealand still has a pretty major labour shortage, as the rest of the sort of world does. But in terms of getting those working visas through and being processed, etc., there's different sort of stories coming out in terms of the number that are being processed. And as the labour shortages weren't severe enough, you still got rising COVID cases. They were up around 7,000 last week, and it does appear that there's a fresh wave coming through now in the sort of early part of summer months and just in time for Christmas. But again, certainly tourists are having a reasonable impact on the New Zealand economy. Since the borders opened up, latest figures show potentially around sort of $1 billion has been spent, and you would expect that figure to rise over the next sort of 2 to 3 months. Still pretty reasonable dividends coming through from some of these, sort of high-paying dividend shares as well. And if you're looking for, sort of income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.